All right, ladies and gentlemen, I got your watch list coming in October 18th, 2019, but we're going to do things a little bit differently considering how the market's been moving here with earnings. There hasn't been too much besides earnings, and now that we got the biggest plays out the way and all of that stuff's moving till next week, it's surprisingly been a slow week, so I figured we'd take this time to recap some of the concepts that you guys have seen if you've been here for a while, but even then for anybody, and talk about some of these plays in the context of weekly options, specifically how to trade weekly options for beginners. And now this is important because tomorrow's Friday. You could learn a lot by watching them and get a better idea of how to go about these, and these are extremely dangerous, so watch out with that. But I figured we'd cover that and then go over some of the plays because we have some of the weeklies and then those potential plays we've been putting, and then we'll talk about kind of everything else for tomorrow. So you guys know what you need to do. Drop your thumbs up on the video, make sure you're subscribed, and the most important thing you need to do, post your watch list below. Let us know what you're watching, and if you have any of these weeklies, I mean, you guys could put them there below. But let's get right into it. The number one thing you need to know for as far as how to trade weekly options is don't. I got you. I fooled you this whole time. We're not talking about that. No, I'm just kidding. But in all seriousness, though, you have to understand why these are so risky. They expire in a short time frame. Theta, the time premium, evaporates really quickly. You could end up spending a lot of money for something that's going to be worthless. If you don't know how these work, paper trade them first. And two, also, man, I forgot to tell you, option trade is extremely risky. You can't lose off that much of your financial investment. Please consult with a financial advisor. These are all educational purposes only. That's important because a lot of you will lose your ass trying to trade these weeklies. So watch how it is. You guys could study these plays, even some of the potential plays I've posted this week. Those were weeklies. I don't know if you guys have been watching or following along with those. Again, some people even put them in the paper trade account. One of them was, this was a weekly here. This was that straddle. This expires tomorrow. So this was a weekly. It was pretty lucrative. And again, you could make a lot with these. However, you could lose a lot of money quickly. So right off the bat, the first thing is don't trade them. But if you are going to use them, don't put a lot of money because you could really stretch your dollar. If you're going to spend $100, you can make that last a couple weeks and still have a high risk reward, believe it or not. People go for the weeklies because they can make a lot of money. I guess even the real number one thing is don't just buy a weekly option because it's cheap. So if you go on Robinhood and you see a weekly option, it's like, oh, it's like 2 cents. Just because it's 2 cents, don't buy it. It has to do with the strike price. And then that's the next thing. Robinhood isn't going to allow you guys to trade weekly options. You're going to need another broker. But this is where it gets interesting, even for a lot of you. If you've made any broker right now with free commissions, some of these weekly trades, again, you could do a lot with $5-10 on a contract. Now tomorrow's a Friday and they're going to be daily. So again, we're talking the broaderness of Fridays. And now as far as this watch list and what you guys could see, these are crazier plays where these are daily contracts expiring tomorrow. But again, now it's cheap because of the commission. So some of these plays that really didn't make sense with one contract, and you would get charged on them because you couldn't do them on Robinhood, they're pretty attractive now. Again, hopefully this doesn't bring out your YOLO demon and go crazy, but it's definitely going to open up some different opportunities there for, again, really small risk rewards. So that's important in and of itself because, again, you guys are even going to see how option pricing moves with it. But on Friday, they get the cheapest they're ever going to be. Again, that's where these opportunities are going to come. We're going to talk about the frog. But again, in the context of it, a weekly option, be very, very careful. Don't trade them. You're going to need another broker beyond Robinhood. And then a weekly option is simply the option with the closest expiration date. Now, sometimes some contracts don't necessarily provide options that expire every single week. They're October 18th. Tomorrow is a big expiration. Almost any company with a contract is going to have it, but then some have October 25th contracts and some won't. But if you're looking for the weekly on any given stock, it's the soonest one. And again, the day of is when they expire. You could still play them, but it's literally a contract on crack and offers a whole different risk reward with how you have to do them. But if anything, on a weekly option, the key with them is be quick to sell it or turn it into a spread. The closer the expiration, the closer you want to sell it. So if you have a week and it goes up a couple 100%, you might have some time. If it goes up, you bought the option tomorrow and it goes up throughout the day, you want to be quick to sell it or turn it into a spread where you buy it. The weekly option goes up a ton in value, and then you could sell another contract more than you paid, get your money back, and boom, you're in a win-win spread that gave you a credit, even though you don't have collateral and can only make money on it. We'll even go over the play we brought up this week with NVIDIA, because that was one where you could see it held up its value, then it's going to fall out, and that's going to be even one to watch tomorrow. But the next big thing with the weekly is the closer to the money, the better. It's better to be closer to the money than more contracts. So this even goes back to that first thing. Some people would just buy options on the weeklies and lose money because they're buying an option 10% out the money. And even if you pay $1 for it, to say Apple's going to move 10% in a day on a Friday with no reason. That's pretty much burning money on fire. But what sometimes people will do is people will get the contracts will go from like 30 cents to 15 to like 2 cents. And then they'll maybe grab the 2-cent ones, or it'll go like 10, 15, 9, and 6. And then they'll get the $6 contract or the $9 one instead of getting the $15 one. The key is with the weeklies, you want to get close to the money, especially on the daily, especially if you're going to be trading them on Friday. The key is that you want to get in the money. It's how much you make after that. This is going to determine if even a play is going to be worth it. That's why some of the big movers are better, especially if you're paying, pennies on it. But then be careful on some of these weeklies, spending $5 on a weekly that expires today, even, yes, 0.05. It's a stock like Ford that barely will move 10 cents. You're going to get in the money and make $10. Then you paid $5, it's not worth it. The key is to get in the money, though, making sure it could move a lot. And that's the whole idea of trading weeklies, is that it has less time premium, so you spend less money to get the right to the stock. So realistically, you're waiting for theta to decline and lose that time value, so you could just try to finesse. It's like literally trading the stock with a way lower premium. And then coming here, wrapping up towards it, is only trade the frogs. We're going to show you that. We've talked about it before. We have the video, but buy the option after it's lost its value, but then it's still continuing in the direction you want it to. I have a play to watch tomorrow that will be interesting, and I'll show you the frog with that. And that's just kind of, I invented it here. It looks like that on the chart. You'll see it, but the frog is important so you so you don't get overpaying, or you could be right and buy the option and be right on the move, but if you pay too much, you'll overpay it. And then this is how you could get some real big gainers. And then finally, you got to look for the catalyst on Friday. Usually it's going to be random news, but thankfully right now we have earnings, catalysts, upgrades, downgrades, the earnings continuations. So again, you're paying a little bit amount of money to get close to the money. You wait for these catalysts. That is what's going to drive it up on Friday. We need something on Friday now, because that will be the best opportunity now, literally looking towards tomorrow. Any news comes out, anything like that, it's going to set up a unique opportunity. Now, too, with the weeklies, as far as even broader risk management, sprinkle, like even if something did happen, news, anything's going on tomorrow, it's always a good rule of thumb, budget. You could buy one of the weeklies and then go buy one for next week or a month out. So if you plan on spending $100 on a play, maybe you could do $25 on the weekly and then spread out the $75 on different dates or the other date you initially wanted. So keep that in mind, but hopefully quick and simple. And the last key concept, we'll go over the frog when we go to the plays. It's push it to the wall. You guys may have heard me say this. The wall is the expiration date. So on a Friday or even that week, the wall is like playing Temple Run. You remember that game on the phone? You're running and then the floor, as you're moving forward, the floor behind you falls off. So if you don't make it forward, by the time the floor falls, you die. That's what it is. The wall, each strike price. We show you here, you see how this is the blue, that's in the money. We'll go to Netflix so it's not a weird GLD chart. And you could even see for tomorrow. You see how these all have value. They all have value right now, even way down here, even on the put side, because anything could happen tomorrow, even after earnings. But every single hour and minute that goes by as the stock isn't moving, pretty much one by one is the wall. It starts caving in. Everything starts falling off. If it doesn't make it, or this is pretty much the wall, you would say, if it doesn't make it towards the wall, the safe zone, by the end of the day, it's going to lose value. And this is what I mean with the frog, because if you buy this in the morning tomorrow, it might be worth a lot, but then come an hour before market, if the stock's not at 305, even if it's at 302, this will probably be the same value. Or if the stock's at 297, this 305 will be worthless. So each strike price further and further out the money starts falling off and losing value. By the end of the day, the only ones with value will have to be in the money. Find the play, watch the option, don't buy it, push it to the wall, let it disintegrate, then buy it right before it goes in the money. And that's even really what the frog is. And finding these plays. So you find a play. That's why sometimes I'll find a play in the morning. I'll say, I'm going to push it to the wall. So I'll be interested in like this 297. And I'm not. I'm just using this hypothetically. It has its value. We're going to see what it does tomorrow. It may be worth it in the morning, but I'm going to push it to the wall and see every single hour. It might go in the money for a little bit, but then fall out the money. Again, it's going to be expensive. Go cheap, get expensive. And then once it's cheap again, then we could buy it here at the bottom. But yeah, that's a little quick summary. So let me know what you guys think about that. Really be safe. Again, paper trade these. Don't trade them. Don't gamble. If anything, you guys could come on stream and you'll watch. You see what we're doing, baby. And now as far as even today, moving to the plays we made today, all I did was I grabbed a Netflix 312 call that expires tomorrow for $2. But this was to hedge this play. So this was the play from yesterday. Remember the unlimited risk trade? If you remember, I got 1873 credit yesterday. That was from these two. So again, I needed, my break even was 322 on Netflix and like 250. So Netflix is below 302 now, and it's higher than 272. But you see how both of these contracts are worthless now because they expire tomorrow. And this is the whole concept with the weeklies. This is why weeklies are lucrative and also risky. But why did these contracts lose so much value? Because Netflix is at 293. So it's $10 away from here and $20 away from here. People really aren't going to pay much to say that Netflix is going to move $20 more the day after earnings and reasonably expect to make more money. That's why the premiums are pretty much dead. So the play I made here was this, because in the morning, and then again, this one I could have pushed it to the wall, but I bought it to ensure myself to hold it. I was up $1,100 of the $1,800 in the morning. It was dropping. I think it was around here. It was at like, it fell below 306. Yeah, I think it was dropping pretty far. That's how I was able to get it. But I grabbed the 312 call and I paid for it for $200. You see, it's only worth 10 cents now because it's so far out the money. But this one expires tomorrow, and my logic was if I spent $200 here, I already collected $1,800, so it lowered my total max gain to $1,673 instead of $1,873. But now, remember, my break even was $321. So even if 302 now, let's say tomorrow Netflix bounces, or even today when it was at the 306, if it ended up bouncing back to 312 or even 315 where it was in the morning and had a crazy earnings rip, that this contract would have protected me. It would have actually made sure I didn't lose no matter what, because then I would have made $929 on here if this one expired. But then if this one closes tomorrow at 312, let's say, then this contract would be worth $1,000, $10 above here. But we sold it for $944. So realistically, the difference would be we already collected that $900. We would lose like $60 on that contract, maybe, give or take. And then anything above that, I wouldn't lose money. So if it went to the break-even price, I would actually be in profit. It pretty much capped my profit at like $700 because we spent $200 for that. We collected the $900. I'm minusing it from there, and then we're assuming we lost. That's like worst case scenario. So then it made sure I was going to walk away a winner, but we did pretty good unless this has a crazy bounce. And then lastly, we're just watching the Iron Condor from here. And then we talked about this. I said, this is your guys' homework. We need to find more plays like this. Call them out. I would love to look at them for you guys, and we could do it. And somebody even took the same play today, and I wasn't too big of a fan of it. They said, what do you think about this play for next week? I was like, wait, that's the one we made. But they did it at 150. So they took the same exact risk for half of the credit, and they had to put up double the collateral. But this was that play yesterday. This was the $200. We made $325 on it because, again, we collected $1,000 collateral. Now if we wanted to buy back, we owe $725. So the difference is $325 profit. But essentially, this goes till next week, so we could still lose on it. So I'm going to be watching this and seeing, maybe there will be an Iron Condor tomorrow there on Netflix, but we'll have to really watch it. But that's pretty much it. And then we watched the IBMs, and that's what I was looking for. And so I have a few potential plays here. I might even start with the IBM because that one's not a spread. I actually have even one spread to look for on IBM. And this is my dilemma. It's either deciding to go long on it or going long and buying the option or not. But I'm expecting a continuation. I was expecting a bigger move today, so the fact that it didn't could lend room to something else. But watch these, and these are the ones I was keeping my eye on. You guys see they were up in the morning. They went to 60 cents. Then they shot up to 140, came, and you can see how they're moving around. This is because they only had 1 day left of expiration. That's what happens with these weekly contracts. So again, be careful. That's why even with 1 day left, if you hold them, the closer to expiration, the longer you do not want to hold them. But they came down a little bit. They're still kind of expensive. I'm going to wait, but you can see how we're waiting for the frog, and this is the frog right here. We're going to get my technical analysis tools here. This is how you properly use the trend line. See that right there? Bam. Look at that little buggy staring right at you with his little buggy eyes. He looks like a happy frog, actually. Maybe this might be the one we need to do, but this is the frog. You see the whole idea with the frog, it makes this gap. This is the stock price. This is the option price, and that's natural. But what's going to happen, you can kind of see it here a few times. The option price dropped when the stock went up, but then what started to happen, when the stock started coming down, the option price shot back up. It's because this expires on Friday. The minute it gets in the money, it has value. The minute it falls out the money, it loses value. Because why would anybody want this with 1 day, 1 hour, whatever? So that's the key here. Is this what I'm saying? You wait till an expensive option gets cheap. IBM is going to start coming down. The option price may not move up, especially on Friday, and especially if you push it to the wall. The closer, whether it's the whole day left, 2-3 hours left, this will get lower and lower. The stock price will get lower, but the option price won't move. That's probably happened to some of you before, and you'll be like, wait, what's going on? Hey, wait! So you can see here, that's what we're waiting for. And then if it comes down, the idea is the stock price goes in, it comes in the direction we want, and you're able to buy the option at a cheaper price. even though the stock price will be at the same price or lower. And that's even what's happening with that Netflix Iron Condor. Throughout the day, we were seeing it's at a higher price now than where it hit the lows, but the contracts are worth a lot more because the time and the theta and all that. So that's the first one. As far as that, we could get a surpriser on HD. I think both of those same plays yesterday, either the 237 or the 235 credit spreads, you could take a look at those, and I think they're paying good collateral. And then these ones, I wanted these in the beginning of the week, and then they went down and up, but now they're pretty much the same price. This is what really caught my attention, and these were cheap yesterday, be it October 18th credit spread. And again, these are potential plays. I did not make these. These are just stuff you could look at, stuff that I look at, and I'm keeping up, and I'm looking at these, but I haven't made a move on them. But October 18th credit spread, sell the 207.50 put, and then buy the 205 put. So this would be a bullish play, or essentially it's going to come up. But they were up a lot, and they kind of sold off heavy, and they kind of did this last weekend. But I'm assuming if they come down here and then they bounce, that could be a good play for this. Could even be a good play tomorrow, because it was only worth 20 bucks today. Now it's worth 88. But if it drops big in the morning, it could come up a lot. And then if Starbucks does bounce, it's either that or Starbucks could be a crazy play on the downside. We'll see tomorrow. So that one. And then also tomorrow, I'm going to have to do a lot of rolling over, but this reminds me of the next play, the UPS. I'm down on this one. And like I said, you guys could use this to see. And even then, that's the best part. You know, we got lucky on the Netflix, but that was a good one. I was even talking about that. The key, and I would say your homework with this is finding iron condors like this that pay such a high credit with such a wide range. This was a very solid play there. So it was lucky only, I would say, in the sense that it's very few and far between we could see you find these types of plays, and that we're able to just take it. Thankfully we took that one big. But this UPS is the other play I want to watch. And again, I'm already at max gain on pretty much all of these, and that's what I was even just saying here with the portfolio. Most of these condors now we're already at, or spreads or anything, we're at max gain. So now we have to decide what we're going to finesse tomorrow. It's getting interesting. I might let some of them go, but I might consider rolling maybe some of the apples for earnings, or maybe we wait an extra week. It's actually honestly just getting really tough to say, but I want to see how things play out here. I'm leaning more towards rollover because we got some good plays. We could take our cash, resettle, but then at the same time, I want to take advantage of the Apple earnings, and we've rolled over so long, it's just a few weeks away, or we just get a lot more time on them, but we'll see. But earnings is going to open up a window too, even with the IV. But I like this UPS, and you could even sell closer to the money, but this one's $100 if UPS does drop. I know FedEx was dropping today, but then there could be some similar plays to that further out the money that are still paying a decent credit for tomorrow. But transports did get squeezed today, so look out for that. And then finally, IBM credit spread again, where I was saying I didn't know if I want to buy the option tomorrow, but if it does stay low there, you could sell the 134 credit spread, sell the 134 call, buy the 135. It's a $48 credit. Or you could sell the 133, buy the 134. Now that's for the calls, but I also wanted to put the puts on this as well too. Again, the question is just seeing how IBM plays, but these are offering a pretty decent risk to reward, but IBM might be able to make a surprisingly bigger move there just following the continuation. So, and even if you think it's bullish too, that'd be a solid one to sell puts on considering what happened. So that's going to be a good one to watch regardless. But that is pretty much it for those. And as far as everything else, tomorrow, just simply, we're going to be watching Netflix. We're going to be watching how those play out. Again, IBM, as we discussed. Then Bank of America, still interested. They're at a crucial point, at literally in between everything higher than 30 and 30. And then HD and McDonald's, and watch Tesla, that play from yesterday. I literally said, watch it for the morning. It went like right at the money. They did exactly with the credit, but watch how it operates tomorrow. And then Amazon, it had a weird move after hours, but they were up today. We should have went in the money on them, but even then, I am going to keep my eyes peeled tomorrow on some sort of tech rally. If things are positive, I want to watch the rotation, how some of these play coming into this Friday before this big earnings season. So again, tomorrow could be very interesting. Then Apple, of course, Boeing as well too. Those are all over the place. Same exact situation with those Teslas from yesterday. And then Microsoft, and then Shopify and Roku. But that is pretty much it. It's going to be a chill day, but also exciting with some opportunities. And again, how some of these continuations and earnings, we can set up real nice, get prepared. So I hope you guys are ready. But that is your watch list. Make sure you guys drop your thumbs up on the video. Make sure you subscribe. We're going to see you in the morning, 30 minutes before open. Stay hydrated, healthy, happy, respectful. Do your thing. Control the budgets. Don't get FOMO. Don't take your account to no-mo. Don't let out the YOLO. I can't think of anything else, but I love you all. I'll see you in the morning, and let's go!